Okay, good morning and good evening to all of you from whichever part of the world you're joining in. Once again, a warm welcome on behalf of GTCFX. This is Harsh, your host. And for those who are joining for the first time, let me just inform you that these are real-time live session analysis uh, on directly on charts. Nothing is prepared here. And one of the most interesting sessions series will continue for the rest of the year until the 26th of December 2025. If you are joining in as a trader, you'll find it interesting to find out high potential trade setups here. Yeah, good evening, Karthik. How are you? Thank you. I'm well. And if you are a trader, you'll find it interesting. If you want to use Elliott wave model to find out high potential trade setups here, we've been practicing that meticulously for the last 8 years now. And the second thing is these sessions are specifically designed for traders. So uh, if you are from the business development or partner side, kindly encourage participation from your traders as well. Welcome, as I can see Jason, you're joining from the US, I suppose. So good morning to you and good evening to the rest of the team. Thank you very much. Let's get started off. Please do let me know if you do have any questions while we are trying to analyze in real time. Okay, let's get started. General disclaimer about the risk warning, whatever we are discussing or proposing in the next 45 minutes should be construed as, yeah, nice to meet you, Jason, as well. Thank you. Should not be construed as any kind of encouragement to trade or investment advice. It's solely on educational basis and for educational purposes only. Thank you. And now let's get started off on the real-time charts. Kindly confirm if you are able to see the screen and I think audio is good enough. Kindly confirm if you are able to see the screen clear so that we can begin our first instrument for the day. It is Euro USD daily chart. What we will do is we'll go on a daily chart and find out the larger degree wave counts using the wave principle. And since the immediate action is on the shorter time frame, what we'll do is go back on an hourly chart and then find out exact potential entry, stop, and exit. Now, for those who were there last Friday, that is 17th of January, must have realized that we already analyzed the same instrument around that time as well. And on 20th of Jan, when US President-elect was swearing in, most of the instruments, euro, dollar index, gold took an alternate path, but euro, dollar index, pound, they shot up as per the analysis that we did. So the idea is, see, we are analysts. We are not God. We can go wrong. But the idea is, if we meticulously follow a method which is the most objective method in today's trading times, then it is worth not looking at or not paying attention to what's going on outside. All right. Even if you're not aware about the major events, if you're just aware of the signals or the charts, because charts are telling us a wonderful story. And let's begin with the first story without wasting a moment. That is Euro USD daily chart flashing up on your screens. The first count here. It is a minor degree impulse wave structure, which was meticulously followed by a complex but tidy enough corrective structure. Just to simplify, 5 wave is an impulse and it indicates the larger direction of the trend. And 3 waves are corrective. It indicates the corrective mode which the market would like to take before the next larger move. Now, ideally, the markets are telling us a clear story here that on the larger degree, after doing the 5 wave movement up there, followed by a 3 wave corrective decline, the next move is high probable on the north side of the same intensity, not necessarily with respect to time, but with respect to price, but it's expected to be of the same magnitude of the larger degree trend. And here the larger degree trend is up. It's 5 waves, all right? Just to give you an idea about what it indicates is if you count pips of the larger degree wave here, it is around 1200 points from 95 to 1300, or just about less than 1400 points. If we add 1400 towards 1.01, it brings us to 1.0, 1.13, 1.14 kind of a price action. Of course, it's not expected to come anytime soon, but if we have this larger degree picture in mind, it really helps us to plan our trades for the next several weeks and months to come. All right. So, one last tool which every trader cannot live without is the Fibonacci ratio. And here's the Fibonacci ratio pointing out it's a neat little 61.8% bounce which Euro has taken. So, in a nutshell, 5 waves up followed by 3 waves down and a clean bounce from the 61.8%. Now, last Friday, when we were analyzing, Euro was consolidating just ahead of the fundamental event lined up on 20th of Jan. Let me bring up that chart with a zoomed view. When we were here, 17th of Jan, that is right around this candle, it was consolidating, all right? And the prediction or the projection was made as follows. I'll do the wave counts here. You've got some question. Oh, thank you. I'm doing great. I mean, thank you for asking. I hope you're doing well as well. So Euro USD hourly chart wave story is as follows. Now here, the only thing happens is the degree changes. Please don't worry about the degree right now. A simple analogy to understanding degrees is if you understand uh, a human analogy, a simplest human analogy is that uh, it's like a son and then father, and the higher degree is grandfather, even higher degree is great grandfather. So that's how the degrees keep on changing. All right. Okay, so minor degree changes to minute on the hourly chart. There is no set rule for this, but the degree has to be lower on because these are smaller waves. These are smaller waves which are constantly working to complete the larger degree wave. Okay. Now that was wave one, which was analyzed on 17th of Jan. This is what the target is, and we are very close to hitting the first target. We have already hit that. We've done that, and that is the projection. All right. You see the first target. That's the wave three actually. I'm going to adjust the count here. I'm going to push wave three up there, and then wave four, and then wave five. All right. So The path to Euro USD is expected to still rally further up to 550, then some decline as wave 4, and then one more high towards 1.06 to complete that five-wave structure. Remember the structure: five waves complete, followed by three waves down. So ideally, euro has resumed an uptrend on a larger degree time frame, and it is just beginning to cut loose on the north side. Repeat, euro is just beginning to cut loose on the north side. All right, we've already done long trades last session, but if you are wanting to enter at this point in time, how would you do that? One is a risk trader would like to go long right now and stop loss just around the same price. Here's the risk: the stop loss does not change right now. 1.0100. So I'm not writing it down to just save time. Aggressive traders may enter here. There is still some upside left towards 1.06, but the risk remains around 1.01, uh, just around 1.01. Yes. Uh, a conservative trader who wants an optimized entry will have to wait for euro to decline a bit. Let's say we'll find out the retracement. I think we've got a question. Jason, you're not seeing the chart on the screen? Okay. Anyone facing the same problem? Anyone facing the same problem? Not able to see the chart on screen? Can you please confirm if you are able to see the chart on the screen, on your screen, sir? Okay. Jason, I think there is some issue on your local side. Most of us are confirming that the charts are clear. So if you're not able to see, kindly refresh the screen and or just log out and log in one more time. You should be fine. If you still don't see, let me know, please. Thank you. Yeah, thanks. All right. So the next, so euro long trades are active with a stop around 1.0100 on a larger degree time frame. The upside targets are 547 for now. Next target is around 1.0630 at least. That is the next resistance. 1.0630. I can confirm that that is wave 5 ending up there, and then we should have a three-wave corrective decline. Okay, now trading below 200 EMA is the current price action that you're watching, correct? What we are trying to do is studying the wave theory, which is the Elliott wave model. You're not interpreting it wrong, brother. What we are trying to do is we are trying to interpret and forecast what is the next possible high potential move. That's what we are trying to do. On a daily chart, I don't know if you were there when we were discussing daily chart, but on a daily chart, euro has confirmed a five-wave move on the uptrend, on the higher side, which has been followed by a three-wave decline on the corrective side. Ideally, when this happens, the next move is five waves towards one larger degree trend, which is up. So the 200 moving average, which you are seeing right now, I really don't follow those indicators, but logically 200 moving average will show up after some more time. Please be watchful. It will take time for the 200 EMA to show up a confirmed buy signal. We are trying to catch it a bit earlier. And in fact, we caught it on 17th of Jan. This is just a continuation of the trend. I hope I answered it, bro. Mr. Ali. All right. So let's continue. Yes, thank you. Thank you, Amin. So let's continue. Euro on the long side, you might want to enter here for another 100, points rally, but the stop loss remains at 1.0100. Let's pick up the dollar index now. One more time, the indicators are mostly laggards. They will give you signal and trade signals when when the bus is already started, all right, to the destination. And it has covered some 10% path or 5% path. But not to worry at all. It is not a bad thing. It is just a slightly delayed version. That's all. What we are trying to do is catch the root of analysis, and that is simple charts, waves, and Fibonacci ratios. Again, I'm flipping the degree to minor. Remember, we are on the daily chart. 5 waves down, it is indicating. The moment you see this happening, all right, the moment you see this happening, two things are clear. Larger degree trend is down, but the larger degree trend will resume after a three-wave corrective move on the opposite side. The pattern is incomplete, and here's the three-wave move on the opposite side. All right. If I zoom in a bit, I don't know if you are able to identify 5-wave move here. I don't know if you're able to see a chart, this candles clearly, but I can bring it down to an hourly. Before we do that, Fibonacci ratios. I really are no technical trader can do without a Fibonacci supplement. All right, you see that 61.8% bounce. So the larger degree trend is on the downside, sir. No matter what fundamentals are saying, no matter what the traders out there are saying, but the charts who are always right, they are telling us a story that a potential top is in place around 110 handle, and now the next move ideally is going to be like this: 1, 2, 3, 4, and 5 on the downside. And it is we are already into the trade. We were there on 17th of Jan. It has been analyzed. The sideways movement is out. The breakout is clear. So it's just a matter of time that we are doing it once again, but we are trying to find out a potential entry for those who want to re-enter, or those who want to enter for the first time. There's the stop loss. Now for the dollar index, the providers are changing. The stop loss might change because some providers have different spot prices for the index. In this chart, the stop loss is about 110 handle, and the lower degree time frames quickly, lower degree waves, sorry. So it's quite possible that we are very close to completing the first 5 waves on the downside at a lower degree, and that would be my new day. All right, I would say, I would suggest that because Fibonacci helps us a lot to decide the extensions. Let's put the extensions on the chart. All right, now it is indicating wave 3. Wave 3 is still progressing. All right, it might go to 106 point something, 0.80. All right, just below the 107 handle, and then there might be a pullback, slight pullback, wave 4. See, what I'm requesting is, even if you're not trading a wave principle, keep a watch and keep note of what we are analyzing here. That's what I requested last session as well. and 20th of Jan we already hit the first target. The targets that were discussed on 17th were somewhere on the same lines, and we are already just about to hit the targets. And please, 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 we are just beginning the trend. The trend is just starting. It is not completing. All right. Now, if we go by the analogy, this is the next target. Ideally, that should be the fifth wave completing. All right. So fifth wave extension is going to go, it's most probably going there. We are still in the wave 3 countdown, and that support is being should be taken out in the next few trading sessions. All right. So the trade setup or a high potential trade setup in the dollar index is to remain short or go short on rallies, have stops around 110 point, maybe 2030, targeting 105. Sorry, first is 107 now, and next is 105. After 105, we can expect a meaningful corrective wave higher, because remember, 1, 2, 3, 4, and 5. 5 waves down would ideally take up 3 waves on the higher side. Now there are different 5 wave pattern. Right now I'm proposing an impulse. Alternately, there could be a leading diagonal. In that case, the 5 wave would complete here, 1, 2, 3, 4, and 5. And it can produce a pullback right from here itself. In either way, either case, selling on rallies is due for the dollar index. Okay. All right, so let's take up the most traded instrument, that is gold. Gold has followed an alternate path. If you were there on 17th of January, this was the alternate path we had discussed. It would go around 2780, possibly around 2800, and then fall. But first, before going to the hourly chart setups, let's quickly. Jason, if you are here, is your technical problem solved, brother? Your screen problem which you were facing? I think Jason is not here. All right. For the long-term view in gold, here's the minor degree counts. Here are the minor degree counts, sorry. So we've got first wave complete. I'm not doing the sub waves. I would like to use the arrow to save time. So wave 1 cleanly unfolded as 5 waves. All right. And then wave 2 neatly unfolded into three waves, corrective A, B, C. Now that rally is a super classic example of an extension. It's exactly a book example of how an extended wave would look like. So it's wave 1, wave 2, wave 3 up there, wave 4, and straight up wave 5. Now it rarely happens that within an extension you have an extension or two extensions. One is here, the third wave was extended. I think we've got a question, just a moment. Can we see same for, okay, also what do you think Trump coin in next 3 months? Yes, sir, we will look into Trump coin. Only thing is we should have enough price versus time data. We will pick up Trump coin as well, as you said. Thank you, Brijesh, sir. Okay, I just got a couple of instruments, uh, Dow Jones and Bitcoin after this. And after we do that, we'll pick up Trump coin as well. So we've got wave 4. Now wave 4, sorry. Now wave 4 is still in the making. It's still not complete, sir. We are halfway mark for a potential wave 4. Now wave 4, I would like to take just 2 minutes to explain the concept here between wave 2 and wave 4. But before we do that, for those who are interested in long-term position in gold, there is still one leg left on the upside, which should resume its rally somewhere around the 2500 mark, at least 2500 mark. All right. And if you are interested in the long-term or medium-term targets for gold, they would come around, let's put it to 2450. They would come around the 3100 mark. All right. Now, should you buy at this point in time or not, or wait for a drop? The answer is high probability remains for a C wave, corrective C wave, to resume and complete wave 4 from where we are trading right now. We are trading around 2778. We should ideally drop towards 2500, 2400 handle before the rally could resume. How do we come to that conclusion? There are two ways. One is the Fibonacci. Normally, wave 4 would come and settle around the 38.2% of the third wave. It is not a rule. Let me repeat, sir. It is not a rule, but it's a general guideline that fourth wave terminates around the 38.2 handle. Second, if we do the Elliott channel, then the channeling technique suggests the support for wave 4 is also coming around the same zone, around the 2400 handle. Sometime the convergence is first week of March. The convergence point is the first week of March time frame. Okay. Now, having said that, the larger degree count is towards 3100. Now, what can a trader do right now? Let's find out. On 17th of Jan, we had decided that if gold doesn't break below a certain price, I think it was 2650, then it is going to go and extend itself towards 2780 and 20. Let me bring up a 4-hour time frame. That would be interesting. You can watch clearly here. Now I'm going to do a wave structure. Let's do the wave count, because now gold is preparing some big move and it's going to take many traders by surprise. This is what gold is expected to high probability do in the next few weeks. So sit tight and pay attention, sir. There is an interesting trade setup happening in gold at a minute degree. Now, this is wave A. Proposed wave B is either complete or it is going to test that particular high, which is 2780 or close to 2800 levels. All right. Now, this particular pattern is called a standard flat. If prices don't go above 2780, it would be a standard flat. But chances are it may go and print a small high above 2780, which is the previous swing high. I think it's 2788, a small high above that, and then turn. In that case, it would be an expanded flat, and it will be perfectly correct for an expanded flat to take shape, because the rule of or a guideline of alternation says if wave 2 is sharp, then wave 4 will be either a triangle or an alternate expanded flat. All right. Now, the beauty of the price action and the wave count is this: it is already touching or just about to touch the Elliott channel. This is an ABC rally. So the Elliott channel is coming right across 2788. And now I'm going to take much deeper view. We are going to analyze this wave, very small wave, right on maybe an hourly or 15 minutes. 15 minutes will be very nice. It's a just put it under microscope and you will see enlarged. All right, that's the last wave. So last wave, again, remember there has to be a 5-wave movement for the thing to complete. So I'm just drawing a lower degree wave 1, 2, 3. That's a triangle A, B, C, D, E. Wave 4 complete and wave 5 somewhere here. Let's change the degree to minute. It is it is very it's technical, very technical here, but at the end of the trade, at the end of the day, what we are interested in that is a trade setup, all right? And that's what I'm trying to find out for us. And the Fibonacci extensions, there you see the first target is 2787 and possibly the second target is 2797. So that wave 5 can extend towards 2797, 2800 handle today or maybe early Monday. It perfectly fits into the expanded flat structure. That is what is expected, a short rally and a turnaround. All right. Now, as promised, how would one place or how would one position for trading point of view? Investment point of view, there is a long call. You've got to buy around 2450, 2500. But trading point of view, there are two possibilities, two trade setups here. The first one that we are suggesting, potential short trade in a very super aggressive way. Sell around 28, 2788 and 2800. Sell around 2788 and 2800. Stop just above that particular high, which is around, let's keep it 2820 on the safer side. But it's an aggressive trade setup and leave the target open. The first target was going to be 2736. So aggressive trade, sell between 2788, 2800, potential aggressive trade, and stop loss around 2820 and target 2736. That is an aggressive trade, okay? Conservative trade, just don't do anything until that high is print, okay? And don't do anything until that low is broke. So let the market print a new high, let it reverse. It breaks this point 2770. When the 2770 breaks, that will be the first confirm price action indication that the market is reversing. So wait for a pullback around 2780 and then go short. So let me write down potential trade, potential short around after this break, okay, 2788, potential short around 2780. Stop can be just above that high. The high which is print, and immediate short-term target is 2735. All right, that is the high potential trade setup for gold. For those who are positional traders or they want to take a position, okay, Vinayji, you can wait for a signal to appear. As we have done in the theory class, it is better to wait for a signal to appear. So you can flip the chart to a candlestick and wait for the bearish signal to appear for more confirmation. What is happening to me is grace of God. After practicing a lot on the Elliott waves, the signals come afterwards. I actually uh, recommend a trade setup based on the waves and price action. Primarily, it's about on the waves that I base my analysis, but but a better confirmation is on the candlestick price on the candlestick patterns. Yes. All right. Okay. Now 2735 is just a short-term target. A medium-term target would be sell around 2780, stop 2820, and target below that low, below 2584. Target below 2584. All right. So if you consider the risk reward ratio, it is about less than 1% risk with respect to the price, 20-30 points of risk, and about 200 points of reward. So it's 1 is to 10 risk reward ratio up there. Okay, I think I'm going to flip the chart to Dow Jones very quickly. Dow Jones is a wonderful story. It's the most interesting story which is kind of building up for the rest of 2025. I repeat, sir, the potential is for the rest of 2025. I will take just 3 minutes of your time to analyze this chart. Please sit tight and enjoy. And if you have any question, then we can discuss later on. And then we pick up Trump coin as suggested by Brijesh Shah. All right, quick enough. Larger degree counts. Wave 1, 2, that is 3. Running flat 4, and that high, I would go ahead and put a 5 over there. And we'll change the degree quickly to minor. Uh-oh. This is just a standard of coloring and what color normally Elliott wave analysts would use for a minor degree. And that's why I'm just following the standard, nothing else, okay? You really need not worry of the degrees unless you want to give exam. That's what I keep on saying. Now, 5 waves are completing on the upside. They are completing on the upside. That means a corrective wave is just around the corner. 3 waves, at least 3 waves, okay? But this 3 wave is not a small degree, it's a very large degree. But let's analyze what has happened on this side. Wave 4, after completing wave 4, now I'm not labeling to save time, I'm just drawing the waves. Now this wave 5 should also unfold into 5 waves. And those 5 waves are here. 1, 2, 3, 4, and 5. Now the third wave should also unfold into 5 waves. So those 5 waves are, let me change the color. Let's take a black arrow. It is 1, 2, 3, 4, and 5. So each wave is 5, 3, 5, 3, 5. It gives me a lot of confidence to print wave 5 of a larger degree is complete. Okay. Now, if we look at the action on the right hand side, let's go back on an hourly chart. The action on the hourly chart is also suggesting that there is a 5-wave decline which is complete. That move is a 5-wave decline. There are smaller waves, sub waves 1, 2, 3, 4, and 5. So what I'm doing is I'm plotting this as wave 1 and wave 2. Uh-oh, that is wave 1 of 1 larger degree, that is wave 2. If it is done correctly, then we are going to see 3, 4, and 5 lower from here. I'm just going to change the degree to a minute quickly. All right, let me go back to a 4 hour for a better view. So what we are seeing here is 1, 2, 3, wave 4 and wave 5. Just hang in there. We are just about completing the analysis here. So if this is wave 1 and that is wave 2, wave 3 extension or the target could be as follows: 37,000 on the front side and sorry, 40,000 on the front side and 37,000 on the second side. That's the first target. That's the second target, respectively. Now, the beautiful thing to understand is 37 or 36 is exactly a larger degree wave 4. You see that minor degree wave 4? That's coinciding with 37,000. According to the theory, when trend is changing, it comes and stops. The first stop is around the previous wave 4 of 1 lesser degree. So the zone where Dow Jones should come and settle, if what we have done is correct, is somewhere between 36 and 37. All right. And the last pattern, which most of us have heard, is also happening on this chart. Let me remove this so that there is no confusion. The last pattern is a head and shoulder pattern. Left shoulder, neckline, head. Neckline break, right shoulder tested. The next ideal wave should be on the south side. Believe it or not, whatever the world is saying about the stock market, but the charts are saying, this is not me. I don't know anything about what is happening in the world out there, but God's grace, God has given me a skill, that is, I can read charts well. And with the help of these counts, if we go that this analysis is done correctly, then we've got to pay attention at what is happening right now. And that is the most powerful signal or most powerful occurrence. Those who have attended Hindi series, education series, and the trading sessions, the trading zones, they know that what is the head and shoulder reversal. We have discussed it in theory as well. That is the right shoulder potentially being formed. There is still no great confirmation, but we've got to keep our eyes very close. Now, what would confirm is the first support break. A break below 43,294. A break below 43,294 would confirm that Dow Jones has stopped. It has made a lower high and the prices are going to reverse. All right, that's the most interesting story of the year, actually, the US 30. Okay, and I think, sir, you were saying Trump coin, right? Let me find out. Is this the one, Trump USD coin? Sir, there is no enough data. We don't have enough data because to analyze on any time frame, we need to have data. Okay, what we can do is we can do an hourly chart, but there is a spike and then there are 5 waves lower. So if I try to do the short-term analysis, yes, if I do the short-term analysis, it's 5 down, which should ideally be followed by 3 up, and it will stop somewhere here and then get down. This is the ideal chart scenario because there is no other wave which can be implied on this chart. What we can do is, rather I would suggest, because there is no enough data. Yes, yes. Nifty and Bank Nifty. Okay, I can do Nifty quickly if others don't mind. Before taking up Nifty, Brijesh sir, this ideally would go to a slightly higher level, but not above 72. Not above 72. Ideally, it should not go above 72. Maybe it should go around 55 or 61. 55, 61, and then turn lower from there. Yes, 40 plus. Yes, 40 plus expected. Yes, 40 plus expected. Thank you. Now, normally, if there is no any other instrument, if you have any other instrument, please let me know. Otherwise, I would like to do a. Okay, Jason is here, so I think the problem got solved. Okay. If you have any other charts, please let me know. I'm done from my side. I'm just taking a quick view for Rishi. Rishi, I've done the counts for Nifty quickly for you and for others. See, Elliott waves, they are not specific to any particular instrument or asset class. I mean, you can pick up your asset class of your choice and the waves will work everywhere. All right. So Nifty has completed 5 waves on the higher side, Rishi, and it has also completed wave one on the lower side. We are expecting wave two rally. Ideally, it should materialize sometime early next week, starting next week towards the 25,000 level. Around 25,000, 25,100 mark, we can go short with the next target around 21 or so. But ideally, prices should not go above 26,300 for Nifty. Is that okay, Rishi? All right, sir. I think I'm done for this session with all the instruments that we've discussed. If you have any other one to take on, can you please analyze? What have you written, sir? Khan Sahab, what are OND soft USDT? ONDO USDT. Is it ONDO USDT? Okay, let me see. ONDO USDT. The only thing is we should have data. If we have data, we can analyze God's grace anything on this earth. Okay, it's almost similar to other coins. Fine. So here's the analysis for ONDT, sir. It's 1, 2, 3, 4. Ideally, it should go to a fifth wave rally. And I'm changing this to, yes, let it be minute because Bitcoin, Ethereum, Solana, Ripple, all are minute. Okay, Vinay, Vinay Gauravji, I don't really follow crude, but it's only a study of waves, so let's do that. Okay. ONDT, USDT, sir. Stop loss should go around below 1.09. Potential trade is on the long side with a target. Let's find out the target as well. Target is just above that, 2.14. Just above that 2.14. Mohammed, sir, the target is about 2.14 and just above that. The next target, if it breaks 2.14 significantly, then the next target is 3.1 and 3.74. All right. But the stop loss, the risk should go just below 1.1 stop loss. Please do not trade without stop losses. And Vijay ji, sorry, I told Vinay, sorry, is he has demanded crude oil. WTI crude, is it, brother? US oil, is this one? Is this the one? Okay, I can just tell by one glance that there is one more wave left. I'm not sure about the larger degree counts, but this wave is incomplete. Just a moment. In the medium term, it's trying to do a 3-3-5 pattern. So the first wave, three waves are complete. The second wave is also complete, and the third wave is going on, which third wave should unfold into five waves. So it's one, two, three, four, and one more high. Ideally, it should go one more high. Let's find out which one. There you go, Vijay. Possibly I think 83 should be the one. Let's also view, this is double confirmation, Vijay. The RSI is around 40, 50. Ideally, that should be wave 4. It can go to 40 as well. But somewhere from RSI 40, it will pick up. And let's do the smaller waves as well. It is matching up 83, somewhere between 82 and 83. So it's a long call, buy 74, stop loss 71. So potential buy 74, stop loss 71, target 82, 83. There you go, Vijay. But that would be three waves, okay? So it's not, don't expect much rallies after that. There's a sideways triangle possibly forming, and after hitting that level, maybe we are going to see one more leg lower. If you are here, kindly confirm. Okay, I think we've got a confirmation from Vijay. No problems, Vijay. You can call me Harsh. I think we are. I think if you do have any other questions, please let me know, or we can bring the current session to a pause, sir. If you okay, I think there are no more questions. So I would humbly thank you all. Thank you everyone for joining these sessions. We have 48 sessions left for the entire year. We are doing Friday sessions for English. We are going to start in Hindi from next Wednesday. We are going to start in Hindi from next Wednesday. So please join in, please tune in. If you want a link, I can give the link as well. But thank you again for joining. You can write an email to me if you have any questions. This is the mail address harsh.jappi@gtcfx.com. So we've got live sessions in English, live sessions in Hindi, and theory sessions as well. Thank you, Narendra ji. Thank you, Brijesh ji. Thank you, Vijay. Thank you, Shrishti. Thank you, Rishi. Thanks a lot, everyone. Shukla ji, thank you very much, sir. Khan Saab, thank you. All right, see you next Friday, everyone. Thank you so much. Yeah, no problem, sir. You're most welcome, Vijay ji. Thanks for your presence. I look forward to see you next time as well. Next Friday, same time. Thank you, Mohammed. Please also invite potential. Thank you, brother Jason. I still see you are here, so the screen problem was solved. Mr. Tahir, so good to see you again. Thank you so much for your kind presence. I'd love to see you all sessions here, and please also help spread the word. We are doing or going to do this for the rest of the year. We are also live on YouTube as we speak. All the sessions done on Zoom will also be broadcasted live on YouTube. You can send the YouTube links also if you want. All right. With that note, I think I would like to end today's session. Once again, thank you everyone for tuning in. Look forward to see you next Friday, and also help spread the word with your potential clients, partners, and existing ones. It's going to be beneficial for all of us, to all of us. Thanks a lot.